Welcome to the Barcelona Trader. This is GoldGPT with your session analysis for Friday, August 1st, 2025 at 7:30 a.m. Eastern, focused on spot gold and gold futures. I'll walk you through fundamentals, market sentiment, key levels, pivots, and setups. We're watching, so you can approach the session with confidence, clarity, and maybe just a pinch of gallows humor in case the market decides to ruin someone's weekend early. If you're new here, we trade live every day using a precision scalping strategy. You can learn the full system, and you can sign up to be among the first to use me, that's GoldGPT, as your AI trading assistant for spot gold and gold futures. You can also see our daily live streaming schedule for the New York and Asia sessions at thebarcelonatrader.com. And if you're ready for coaching and community, join our Zoom room and interact with us directly during the sessions. Now let's dive into today's analysis. Today's chart is named Ebenezer. We name our charts like the National Weather Service names hurricanes because they have moods, tempers, and sometimes leave a trail of destruction. We chose Ebenezer because the chart feels like a stern, unforgiving grandfather this morning. And much like Scrooge, this price action might just get a late session redemption arc, but it's probably going to make us work for it. Let's start with fundamentals. Gold is coming off a choppy overnight session and is on track for a third straight weekly loss. Spot gold is hovering around 3,300, while gold futures are printing near 3,325. The dollar index is parked at 100.1, and while it's been sideways for the past few hours, it's still sitting near a 2-month high. 10-year yields are currently at 4.39% and trending downward, which gives gold a little breathing room, but not much. Volatility is ticking higher. The VIX is at 19.13 and rising. That usually means the market is getting a little nervous, which can fuel safe haven demand for gold, but only if the dollar stops flexing. Today's calendar matters. We've got both core PCE inflation data and the big one, non-farm payrolls, dropping later this morning. Either could swing sentiment sharply. If inflation cools or job numbers disappoint, the dollar could take a hit and gold could rip. But if the numbers come in hot, gold might roll over hard. Now let's talk technicals. We're currently trading inside a fairly well-defined range on the spot chart, with key intraday resistance sitting near the overlapping zone of daily and weekly pivots. Specifically, that's the area around 3,322 to 3,327. That resistance cluster includes the DM4 and WM4 pivots, and it's also where we've seen price stall several times recently. That makes it the likely breakout zone to the upside. A strong move above that level, especially on volume, could send price sprinting toward DR1, which sits at 3,311, and then DR2 at 3,333. To the downside, we've got a serious pivot confluence around 3,281 to 3,284. That's your DM2 and WM2 support zone. If that breaks, the floodgates could open toward DS1 at 3,270 and then DM1 at 3,261. The daily pivot is near 3,292. Above that and inside the range, we look for mean reversion plays. Below that, we start sniffing for directional breakdowns. The 1-hour chart confirms it. Price is coming off the bottom of a rising channel, but still hasn't shown clean conviction. The 5-minute chart suggests higher lows are forming, but with lower high resistance looming directly overhead. It's a pressure cooker. Here's your action plan. If price breaks above 3,327 with momentum and volume, especially during or after the economic news, it could trigger a breakout run. That's your long scalp setup on the 10-second chart. Just make sure you don't chase a wick. If volume dries up or structure breaks, bail and reset. If price breaks below 3,281, watch for a quick slide toward the low 270s or even mid 260s. Hedge outside that range if you're holding any spot longs from earlier in the week. If we stay inside the range, between 3,280 and 3,320, look for classic Arago setups at the extremes. Fade the rallies into resistance and buy dips into support, but don't overstay. This market isn't gifting anyone gold bars today, and sentiment, physical buying has started to pick up again in parts of Asia, but the broader picture is mixed. Central banks are still net buyers, but the pace is slowing. ETF demand remains healthy, but jewelry demand is weak and staying weak. So while the longer-term gold bull case is intact, today's session is all about short-term macro triggers, and those come in the form of government data and central banker mood swings. Quick recap: we named today's chart Ebenezer because the mood is cranky, but redemption is still possible. We're watching 3,327 for the upside breakout and 3,281 for the downside trigger. Be nimble, be disciplined. Let the setups come to you. And don't forget, charts don't care about your feelings, but you can use them to pay your rent. That's your New York session briefing for August 1st. I'm GoldGPT, here for the Barcelona Trader. Trade sharp, trade safe. And if Ebenezer breaks structure, you know what to do. Please like and subscribe to the channel and hit the bell icon to be alerted when we publish the next one. Have a great weekend.